Hello, and thanks for listening again. This is Rick Bosley. I'm the owner and founder of the 3L Coaching Company and Bosley Team Real Estate Solutions. And once a month, we're bringing to you what's happening in the real estate market. I was a bit off the grid last week. I had a really cool experience. Flew to visit family in Minneapolis, and then we drove up to Canada, where we took a seaplane, fly in, fly out, fish camping, primitive lodging, and we spent 5 days on a John boat with a low horsepower tiller, catching bass and catching pike and hunting for muskie and everything else. So I say that because I'm about a week late. This normally comes out around the 15th, but we're going to take a look at the data of what's happening in real estate. And normally it would mount. I was up in Ontario catching some fish. So that's a lot of fun. What's your favorite spot to fish? You have a favorite fishing spot? Let me know. We really enjoy it, and my kids are enjoying doing it with us. We're learning that. Want to make this feel a little more organic, like you get to know me. If you follow me on social media, I just made my profile picture, the northern pike that we caught. So shout out to North Gateway Outfitters for a great experience there. All right, let's talk about what's happening in real estate in the Central Florida, Orlando area. And I've added here, I'll go ahead and make it as big as I can, a little bit of data of what's happening in real estate. I'm going to just do it so I can also see. There we go. We're looking at the data the same way here. So this is looking, and it's stamped as June, but really it's May versus this year versus May of last year, and then May of this year versus April, just 1 month prior. So we're looking at year over year, month over month, and let's take a quick look of what's happened year over year, because we say the market is changing and it's shifting and we feel it. But what do the numbers really say? Just as a reminder, if you're first time listening to this, the Orlando Regional Realtors Association expands predominantly in the Tri-County area, Orange County, Seminole County, and Osceola. And then we have a little bit of Polk, a little bit of Lake, and a little bit of Volusia. So that's that surrounding area, greater Orlando. So all of that, last month, as the month end, real Memorial Day, we recorded just shy of 14,000 homes for sale, as opposed to last year was just over 10,000. That's a 35.7% increase year over year. A lot more inventory. You guys know what it means, supply and demand. If you have a lot more supply, the prices will flatten. We should expect to see a flat or a decline in prices as things continue there. Though ignore the color code right now. We'll change that by the time you see this, but we changed that color code. But it is up 35% in inventory, and new listings are down. So at least the new listings are slowing that a little bit. But when you look at the listings versus new contracts, 4,200 from 2,500, we're looking at a gap of 1,700. That's going to add an additional surplus. So by the time this comes out next month, we should be seeing well beyond 14,000, if not 15,000 homes for sale. Just looking at how many new listings entered the market versus new contracts took away from the market. If you look here, the new contracts, if you just keep going down, 2,500 and then close 2,500, those are pretty steady. Total pendings, 4 to 2. That tracks because our average closing is around 45 days. So that would be this month's 2,500 plus another 12. So that tracks. But if we added 4 to 200, we're going to see a surplus. We're going to be above 15,000. And again, more supply is less demand. When we look at closed sales year over year, you can see last year we had 2,900, this year 25. So you look at that in months of inventory of last year, almost 3,000 homes sold out of 10. At the very bottom month supply, that was 3.5 months. 3.5 months is still very much a seller's market. Seller's market is really anywhere from 4 to 5 months. 4 to 5, and then balanced market is at 5 to 6, and then buyer's market becomes north of 6. We've been creeping higher and higher towards that 6. And this is for everything. If you look in condos, you're well beyond that. You look in luxury, you're well beyond that. You look at parts of Osceola County, you're well beyond that, very much in a buyer's market with prices falling and prices dropping. The median price point, it did go up still 1.3%. Historically, that's less than what inflation is doing, which means it's kind of losing money because the dollar is more expensive than the housing market. Historically, housing market has gone up 4% year over year. So seeing 1.3 definitely says, and it feels flat with less transactions and about the same median price point, becomes just natural, less monthly volume. Days on market are 60 days. Days to sell is 103. I'll tell you, when we've got our active listings and it's beyond 15 days, 20 days, 30 days, it feels like an eternity. So know that the average is 68, and that's up from 54. So the average is 68. It's staying steady there, and the time to sell. So if you wanted to do it and you were going to be average, right? Not pricing it to sell and not pricing it to sit, but just right in that middle of being aggressive, but getting attention, it's going to be about 3 to 4 months for you to sell it. And that's telling us, and that is also slower. So it's taking longer to sell your home, and there's more homes that you're competing with, and less homes are selling. That's the market we're in versus the same time last year. Now, what do those trends tell us month over month? Well, when we look at April to May, in just 1 month, we saw a 5% change in inventory. If you take 5% times 12, that's annualized to 60%. I hope we're not there. I hope we don't continue to see that big of a jump. Adding 650 homes of inventory up 5% in 1 month, that's a big inventory bump. We should see that slow down. We are in the prime summer season, which is when many people are preparing and getting a house on the market. So we should see that slow down a bit in terms of the new listings that were taken. It did slow a little bit. April, you saw 4,500. Now we're in May of 42. New contracts about the same. Total pendings about the same. Closed sales were about the same. All those under 4% change. The average price point, you can see a massive jump. It went up to $795 from $476. I want to make sure real quick that I didn't just kind of mistype something in there. Yeah, I did. It's not $795. This is $495. That number just didn't make sense. That's the data. That's the correct data there. Okay. Hey, I'm back. So just change that. It's $495, which is 4.1%. In fact, let me just share this screen. Now you've got a different tab. 4.1% increase in an average price. The median is really what we're looking for, because average can be so skewed by one big house or a lot of small houses selling. So the median is what we look at for what's the market doing. 1.3% year over year, identical and flat within $100 month over month. Monthly volume, we see it increased by 8. That's really seeing a slight in the average increase there. And sales are slightly up as well. So that's what your monthly volume is. Days on market the same, days to sell the same, and month of supply is the same, which is what we'd expect, because when we have a slowing or a softening market, we expect the month over month to be very, very gradual. Back in post-COVID, when the interest rates were great and people were moving because they could, not because they had to, we saw the month over month movement pretty much as radical as you did the year over year. But right now, if you're looking to buy or looking to sell, buyers, you've got options, and I think you're going to continue to have more options, although the new inventory will lessen because a lot of people were preparing to get their house up and ready to go for that new inventory. For sellers, if you're going to wait, consider why you're waiting. At the end of the day, hopefully if you're selling, it's because you have two life circumstances or you have enough equity that moving 1 or 2 months won't change. As you can see, the month over month movement is not radical enough to make an impulsive decision. But it will be gradual over time. You're not saving money. You're not losing money. It's just kind of flat. We had people ask me, what's my opinion of what the market's going to do in the upcoming couple months? We are back to traditional market. We are back to seasonality having more impact than non-seasonality. And that tells us July is the last surge for contracts. We're going to see contracts slow in August. And therefore, you're going to see a cliff of closed sales drop in September. And that will take us through end of Q3 into Q4, and it'll slowly get down. Historically, November, December, January is going to be our slowest months with number of contracts, but it also should be our slowest months with new listings. The whole market just kind of hibernates, doesn't go away. We can still have activity. The ratio should actually remain intact. The 5.5 to 6% months of supply, that should remain intact. The market won't change in terms of the volatility or the supply and demand or the multiple offers or not. That shouldn't change. So my prediction is we're going to stay pretty stable here. Small gradual changes by 1 or 2 days, small gradual changes by $1,000 here or there, small gradual changes month over month. So if you're thinking about selling, you're okay. You can wait. Just know that your buyers are looking now and your sellers are listing now. You'll just have different competition. But you know what? If 10 people share a big piece of a pie or 5 people share a smaller piece of pie, you might get the same amount of pie. That's the prediction right now. Hope it helps. You guys are thinking about buying or selling. Now's the time to have a conversation with us. We can tell you what this looks like for your local market, for your local area, for your style, for your age. It's called a comparative market analysis. Many people still think CMAs are how we're going to, or appraisals are how we're going to price it. I want you to think more of the future, less of the past. Just like when people were paying $30,000 and $40,000 above appraisal, the appraisals what happened in the past. Buyers look what's going to happen in the future, and in the future, we're seeing homes go for at or below median price point. Take that into consideration. Hope it helps. If you have any questions, reach out to someone on my team or myself. You can reply back wherever you're watching this. Drop a comment, or you can also find us online, or just give me a call, 321-277-5791. Thanks for listening. Everyone have a great day. Take care.